with his parents and he doesn't even know it.
Who is that?
You bet.
Grace?
Yeah.
Really?
Yeah.
I know it.
All right, well, let's go ahead and get started for today. So, as I've been telling you guys, we've got a guest speaker with us, and this is Mr. Freddie Brower with American Family Insurance, and he's going to talk to you guys about a topic that is really important that most teenagers don't know very much about, and honestly, some adults don't know very much about, and that's auto insurance. And so I'm going to pass out a handout to you guys, and then I'm going to turn things over to Mr. Brower. If you have questions, I don't know if you want them to ask as we go, or
Yeah.
you just want them to hold the questions till the end. But anyway, just go ahead and make sure that you're paying close attention. You do not need your Chromebooks open for this. Okay. There is, once we're done, there is a just like yesterday where I had a document for you to just check off that you viewed the presentation or that you did the assignment with your parents. For this one, once you're done, you're just going to check the box. And that'll take care of it. That's all we're doing today. Okay? So give him your undivided attention and a warm welcome to Mr. Brower.
Well, good morning. I hope that this is something that everybody will kind of pay attention to, because in all honesty, this is something you will use for the rest of your life. Unfortunately, most people depend 100% on someone else to do their insurance, which is why I have a job. However, it's also very, very good for you to know what is on your policy and how it works. You want to start, how many people even know what insurance actually is? Okay, a couple of you. The easiest definition that I can give you for insurance is it is a transfer of a risk to something else. So basically, when you drive your car, every single time there is a risk that there could be an accident, whether it is your fault or not. And instead of having to go and say, I have to have X amount of money to pay for all of that, you're transferring it to an insurance company, okay? Now, to some people, I guess if you're a billionaire, that's not that important. To someone that's like me, it's very important because I wouldn't have that kind of money. In fact, the state of Illinois actually thinks that it's so important that they make insurance mandatory for every automobile that's on the road, all right? So what I've done is I've given a little quick handout. If you want to take notes, you can. I just put basic stuff on here. If you don't want to, that's fine too. But there are required insurance limits in the state of Illinois cover several different areas. One of them is bodily injury. Bodily injury is going to cover the other person and not you. So if you're driving a vehicle, you were involved in an accident, and it's your fault, basically, this is the portion that is going to cover the other person's bodily injuries or medical bills, lost wages, pain and suffering, that sort of thing. In other words, they sue you for it. The state of Illinois sets that minimum per person in your car at $25,000. So for you to operate a motor vehicle, you must have $25,000 per person for bodily injury. There is also a second limit that falls under bodily injury, and that is per occurrence. An insurance company is always going to put a limit on what it pays out, okay? So in this case, that is $50,000. So I'll give you an example. If there's an accident, someone in the other car gets hurt. There's one driver, they have up to $25,000. Or if there is a second person in the vehicle with that driver and they are injured, again, they have $25,000. If there is a third person in that vehicle, that person will get $25,000, except for once the insurance policy pays a total of $50,000, they're done paying, which means that those three people have to divide $50,000. Does that make sense? Okay. The reason that I bring this up is because that is what they call state minimums, meaning that that is what is required. However, you as the consumer, you as the person purchasing it, can choose to go with higher limits. It is highly suggested that you do take higher limits. The reason why is the exact example that I gave you. It's not very uncommon to have 3 people in the vehicle, okay? If you exhaust your $50,000 in this case, guess who pays anything and everything over that? Exactly, you do. Or in your cases, your parents, because you're under the age of majority. You will notice the next point on here is property damage. That again is the liability for the other person. That property damage on there is for their car or for Walmart. Okay, and I don't know how much you read the paper or look, but there's at least once a year someone accidentally hits the gas instead of the brake and drives to a Walmart somewhere around here. Okay? The minimum on that again is $25,000. Any guess on how much it costs to repair a Walmart when you drive your car through the front of it? Exactly. So my point on all 3 of these, they go hand in hand. Our agency has made a commitment to our customers that we actually will not sell the state minimums any longer. We start off at $100,000, $300,000, $100,000, respectively on there. We are actually suggesting people look into going to $250,000, $500,000, $250,000, and I'm going to give you a quick example why. 2 summers ago, there was an accident between Staunton and Springfield. There was a construction zone that had slowed down. There was a gentleman that was on a motorcycle in the passing lane of the interstate. A car that was in the right-hand lane, driving, realized that he was going to have to merge over eventually because there was an arrow, and turned. This is not in the situation where they're down to 45 or 35 miles an hour. They're still driving 70. He crushed this motorcycle. It was his fault. He didn't pay attention. With that in mind, I want to go through why we suggest higher limits. Number 1, the motorcycle rider, thank God, got better, okay? But his injuries were so severe, they had to fly a helicopter out to the crash site. Does anybody have any idea how much it costs today to land a medical helicopter anywhere and pick you up? What the bill on that is? No, not quite.
Isn't it like around 50 grand?
You are correct. In his case, it cost $49,000. That was, nothing else was taken care of. So here's my question. If you have $25,000 for bodily injury, you've used the 25, you already basically owe $25,000 out of your pocket. Now he had to go through the medical portion of healing, surgeries, hospitals. He then was out of work for at least 6 months. You have to pay somebody for being out of work in the case of an auto accident. So as I'm going to throw out, even in this case, $250,000 worth of coverage on the 250, 500, 250, that came close. So my point is, when you purchase insurance, yes, if you take lower limits, it's going to save you money out of your pocket. However, transferring that risk, if you don't go with the higher limits, you are putting yourself in a very, very bad position later on, and that will follow you the rest of your life. They can garnish wages until that is paid for. So that, I wanted to point out that that is very important. Now you're going to notice the next 2, which is kind of going against everything that I just said. Required is also uninsured motorists and underinsured motorists. And below both of those, you will see per person and per occurrence. And again, the state minimums are $25,000, $50,000. This kind of goes against everything I just said because I told you that the state of Illinois requires you to have insurance, right? Unfortunately, Not everybody decides they want to play by the rules. So now you are in your car and somebody hits you and you're hurt and they do not have insurance. We're going to get to what's going to happen to them later on, but if they don't have insurance and they don't have any money, how do your medical bills get paid? How does all of that? This is the portion of the policy that basically your insurance company is going to pay for your medical bills, your lost wages, pain and suffering, and everything else that goes with it. In turn, included in that, they are then going to hire the attorney to sue that person to get their money out of it, whether it is garnished wages or whatever, okay? So the state realizes that not everybody is going to be honest, not everybody is going to be forthright, so they do require that to be on your policy as well. Does anybody have any questions so far? Am I boring you all with this?
No.
I didn't even get a yes out of anybody. Now, those are the state required coverages that you have to have. But with insurance policies, there are several other things, because remember, up to this point, all we have done is covered the other person. If you're involved in an accident and it's your fault, how does your car get covered? Well, if you choose to have liability only, it does not, okay? Basically, you have made a choice that you are not covering your car involved in an accident. However, if you've got a nice car and you want to cover it, there's two additional endorsements you want to put on there. One is comprehensive coverage, the other is collision. So to give you an idea of what the difference is, comprehensive is anything that is not considered a collision by the state of Illinois. Examples of this: hail damage, hitting an alive animal. In other words, like a deer runs out in front of you. Theft, vandalism, those are all good examples of comprehensive claims. Collisions, by definition, is something collides with you, okay? So that's anything from a car hitting you hitting a pole, you hitting a car door being flung open in the parking lot into the side of your car. That is a collision. Someone actually pushing a shopping cart into the side of your car, even though I would consider it vandalism, by definition is a collision. On those, you get to choose a deductible. Does anybody know what a deductible is? Okay. A deductible is the portion of your policy that you are saying to your insurance company, this is how much I'm going to pay in this instance. And then the insurance company pays for the rest, okay? So most people, they look at it as far as what they can afford and what they cannot afford, okay? You can start with a zero deductible, meaning that the insurance company is going to pay for everything. You can go up to as high as a $10,000 deductible with most companies, meaning that if you're involved in an accident, you pay the first $10,000. There's a variety of between $250, $500, $750, $1,000, and going up. They're usually in bands that are set by the insurance companies, okay? Same thing on collision. Both of them have these deductible situations. What I want to point out is the cheaper the deductible, the least amount of responsibility that you're going to take at the time of an accident, the more expensive the insurance is, okay? But I want you to understand something, because I found this out 2 weeks into selling insurance. Lady came in my office and wanted to raise her deductible on her comprehensive, which covers glass, from $100 up to $500. She needed her insurance premiums to be cheaper, okay? In that, 3 weeks later, she had a busted out rear passenger side window. She comes to me and tells me, I need to have my window replaced. Looked at her policy and I said, you know, you raised your deductible up from $100 to $500. Well, yeah, I needed to save on insurance. I said, well, that window in the back made a phone call. That window in the back only costs $280 to replace. You have no coverage for insurance because you have to pay your deductible first. That woman drove around all winter with a plastic bag taped around her window. She could not afford the $280. She could have afforded the $100, meaning that for her to save a few dollars on her premium every month, she could not pay for her deductible. So when you choose your deductible, yes, the higher you go, the cheaper your insurance rates are, but you have to ask yourself, I'm taking a $500 deductible. Can I afford $500 at any given time? Not just right now, any given time. Because if you can't, you need to pay a little higher insurance to make sure that you can have a lower deductible so that you can afford it. Because this was just a window and it was an easy fix for her to get through the winter. However, what if it would have been a situation where she would have hit a deer and her vehicle was undrivable? Now she wouldn't have a way to get back and forth to work. So just something to think about on deductibles. There's also a coverage that is on there that is called medical. What medical does is it provides for the people that are inside of your car. Now, typically speaking, you are not seeing something like 100,000, 300,000. Typically speaking, it's 5,000, 10,000. In some rare cases, I will see 25,000 from other companies. What that does is if you go to a hospital due to a car accident, the first thing that the police are going to do, or the hospital, is they're going to go and find your insurance card. Not your auto insurance, but your health insurance card, okay? In most of your cases, they're going to talk to your parents. They're going to ask you, where's that card at? Let's say that your health insurance, I'm just going to pick one, Blue Cross Blue Shield, because that's a common one in the state of Illinois. They will turn the insurance in, or the claim in to that insurance company, the hospital will. They will ask, well, what happened? Well, they were involved in a car accident. They're going to deny the claim in the beginning. They say, we're not going to pay for it. Because they want to find out what you have on your insurance policy, all right? Then the hospital will go ahead and contact you, or in this case, your parents again, because I know no one in here is over the age of 18, and they are going to ask them for the car insurance. What's going to happen from there is typically, a lot of cases, people have 5,000 to 10,000. The reason they choose that is it actually covers the deductible on their health insurance. Once that's exhausted, it then gets put back on their health insurance and the health insurance pays for it, okay? If you don't have medical, your health insurance is still gonna end up paying for it, but if you have a deductible on there, now you've just had a deductible on your car, and now you have a deductible on your health insurance. So that is designed so that you only have one deductible for that accident, okay? Does that make sense? Okay. Another one is emergency road service. Emergency road service is something that is going to cover you for towing, lock your keys in the car and have to call somebody to get it out, changing a flat tire, that sort of thing. Typically, most insurance companies offer this. Some of them do it at a dollar value. We're going to pay $40 or $50. My company happens to go and look at it from the fact that they are going to pay for an actual charge, as long as it's towed to the nearest facility that it comes to. So if you're down in St. Louis, you don't want to have butts go all the way down there. Tow it back to Staunton, tow it to a local place there. But that is also something else that you have to choose from. Rental reimbursement is another endorsement that is on there. Rental reimbursement is going to be a situation where your car is undrivable due to a covered loss. Gives you the option to go out and have the insurance company pay for the insurance, or not the insurance, pay for the rental car while yours is being fixed. Kind of a huge help in that case because you've already got your deductible going out. This is going to be something I want to touch down on, customized vehicles. Does everybody know what a VIN number is on a car? Vehicle identification number? Okay. That number is going to tell the insurance company exactly what that car has on it. From everything from what type of exhaust, whether it's single, dual, or quad, to does it have power windows and power door locks, which all vehicles now have those. But what I want to point out is Anybody into customizing cars? Anybody watch those shows? Okay, you do. If you customize your vehicle, that's not in the VIN number. The insurance company is not including that in your premium or the coverage. So if you go and you look at some of these custom shows where they put $30,000, $40,000 into a car, if that's the car you buy, you need to let your insurance company know. Because otherwise, you're going to just simply end up with the car that you have, okay, in the beginning. A lot of things that people are starting to see on television, that's why I put these on here, is I'm sure everybody has heard of accident forgiveness and new car replacement. No company gives those for free. It is an additional endorsement that is charged to you, and you actually choose to purchase it. Accident forgiveness means that the very first accident you're in, they're not going to charge you for it. I'm going to get to rating here in just a second. New car replacement typically only lasts, depending on the company, between 2 and 3 years. And what that does is, if you get into an accident, and does anybody in here have their car already? Okay. Any idea how much the car was valued at when you bought it? Don't answer that. That's for us to discuss. But if you've got a car that you buy and it was a $15,000 car, okay, and it was a used car, we know that car values go down all the time. They are an appreciated item. With that in mind, if you go out and buy a brand new car, say you buy a $45,000 truck, we know that as soon as you drive that off the lot, it is going to lose somewhere between $5,000 and $7,000. You go and try to turn around and trade it in the next day, that's how much you're going to lose. It's just the nature of the business of car business, okay? What this does is, for those 2 or 3 years, if you get involved in an accident and your vehicle is totaled out, okay? So you bought that brand new in 2018, total it today. If you have that endorsement, you are going to be able to go out and buy a 2020 brand new truck to replace it like quality, okay? So it can't be a higher step up. The only thing I want to point out about this is that does typically only last for 2 or 3 years. After that, you're back into the depreciation mode. Okay? Any questions so far? Now, there are discounts that insurance companies put on here. The ones that are probably the biggest discounts are multiple vehicle. So I have one vehicle in my household. Okay? If you have 2 vehicles and one of those vehicles is the exact same one as I am, and the person that is driving it is the exact same age as me, same job description, same mileage, same driving record, I'm going to pay a higher price than the other person. The reason why is I'm not eligible for a multiple vehicle discount. That discount is actually given by the insurance company for the insurance company, because the more business they get, obviously the more money they stand to make. So with that in mind, that is something to point out, that when you're talking with your friends, if you've got a standalone vehicle and they've got multiple vehicles, 1, 2, 3, 4, every time they're adding a vehicle, there's a possibility that it's bringing each one of them down, okay? Multiple policy, same thing. If someone walks in and simply has their autos insured, they're going to miss out on a home and auto discount, possibly a watercraft and auto discount, a motorcycle and auto discount, life insurance, farm. Anytime you add a policy, you get a discount now. So I just wanted to point that out. Now, here is the huge one. I don't even want to show hands because I don't want anybody to say I'm trying to point them out. If you, Staunton is still on a 4-point scale, correct? Okay. If you have a 3.0 accumulative GPA from the time that you started Staunton High School, whoever is paying your insurance, whether it be you or whether it be your parents or a grandparent or a friend, they owe you a very, very big amount of things. That is a very, very huge discount for anyone that is 16. Unfortunately, you are at the highest rate you are ever going to be when you turn 16 years old because you have no experience driving by yourselves. However, with having that, we are seeing, depending on the company, and again, I'm not trying to just talk about my company because several of you may not have it. We are seeing average discounts ranging somewhere between $150 up to $600 per year, depending on the company. That's huge. That's almost like working, getting paid for what you're supposed to do anyway. So I just wanted to point out, remember, it does not just start when you're 16. If you have not reached that 3.0 cumulative GPA, okay, keep working. Because guess what? As soon as you hit that, you turn that into your insurance company, you get an immediate drop in your insurance rates. Okay? So I would highly suggest looking into that because that is a huge savings. Now, the way that insurance companies rate you, and what I mean rate is how they come up with your rates. It's not just, oh, here's a 2017 Ford Fusion, it's going to cost this. There's more that goes into it. They look at your motor vehicle reports. Anytime you get a quote, the insurance company is going to look into your motor vehicle reports, which is from your driver's license. It says how many accidents you've been ticketed for. Not necessarily how many accidents you've been in. It is going to talk about speeding tickets, reckless driving, DUIs, driving under a suspended license, driving without insurance tickets. All of those show up there. That is something that gets rated on your insurance. Accident claim reports. Most insurance companies, 98% of them, all report every single claim that their customers have. So that if they go to change companies, the other companies know that they are taking in possibly a higher risk. Somebody's got 4 or 5 accidents over the course of the year. Chances are they're probably not a really great risk. They probably need to go back through this class. So with that in mind, they look at that. They also, starting in 2006, went back to checking people's credit reports. And even though I would love to sit here and be able to explain to you exactly why your credit has anything to do with the way that you're driving, on every aspect, the one that I can tell you is this. If someone has a vehicle that is not necessarily the newest on the block, and they find out that they need work done to the front end of this car because something could quite possibly break. And if the theory behind it is, if they cannot afford to pay cash for it, and if they do not have the best credit, they may not be able to pay for that. And if they cannot pay for taking care of their vehicle and continue to drive it, they have just become a risk on the road. Now, I want to point out, when I was in Staunton High School back in the late 80s, before any of you were even thought about yet, they were starting to check credit, and there was a class action lawsuit in the state of New York saying that you can't do that. That's not fair. It literally stopped in the early 90s, and again, it first came back. Every insurance company stopped it, they brought it back. So it is something that the United States federal courts have stated that is a rating element that insurance companies can use. So that's not going to go away, but I just wanted to bring that out. Insurance companies are also not only using that, but they are starting to look at your payment history. If you're consistently late paying with an insurance company, or you go and cancel out, and then a month later you reinstate, that is all now becoming a negative towards what insurance rates. After a 6-month time, we have actually seen people's insurance go up by $200 or $300 every 6 months, depending on how many times they've been late and how many incidents like that they have. Unfortunately, the next one applies to everybody in here. Age of driver. Age of driver is a rating because we look at driving experience, we look at reflexes, we look at the entire group. Have you ever heard of an actuarial? Actuarial, if you're good with numbers, look into this job. It is a very, very, very high paying job. Insurance companies hire the majority of them. What they do is they look at statistics. They go and they say, okay, let's look at Freddie Brower. He drives a 2017 Ford Fusion. He drives this far to work. He's single. He lives in this particular town, blah, 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 blah. What is his chances of having an accident in that particular vehicle? So they cross-section every person that matches me, okay? So with that in mind, age of driver is one of those criteria. Now, I just told you that you are at the worst rate class that you are ever going to be in. Anybody want to take a stab at what the second worst rate class is?
You're like really old.
You hit it on the head. Starting at 80 years old, insurance companies start raising the rates. And in your case, typically an insurance company is going to have a standard rate for you for the age portion. Up until the age of 19, you've got 3 years driving experience, your rate's going to drop. 21, it's going to drop. 25 is going to drop. 30, it's going to drop. 50, it's going to drop. 70 is going to go up a little bit. But 80 is when it starts getting very unattractive again, okay? And just so you know, my mom turned 82 years ago. She became my worst customer. I got chewed out like you have no idea when she got her bill. Primary and occasional. How many of you are the oldest in your family? Okay. How many of you, yeah, that's right. How many of you have older siblings? Okay. How many of those older siblings all drive? Okay. Here's what I want to point out. When you are rated on a policy, you can be rated as a primary driver. You can be rated as an occasional driver. And the difference is this. It's the difference between drivers in the household and how many cars are in the household. So if you live in a household where there is one vehicle, one driver, they're a primary driver on that, okay? If you live in a household that's got two vehicles and there's two drivers, they're both going to be primary because there's one vehicle for each person. But if you get into a situation where you have one car or two cars, but there's more drivers at that point, you can be made an occasional driver, okay? The reason I bring this up is everybody wants their own car, okay? And sometimes they look at mom and dad and can't understand why I have to share your car, why I don't get one. Well, one of the reasons is just simply cost effectiveness. If you go and you take a 3-person family that has 2 cars, one of the drivers, which typically is the youngest one, begins to become an occasional driver on there and will probably save the household somewhere around 40% on their insurance for being an occasional. But once you have a vehicle for each person, everybody has to be primarily rated on a vehicle. Okay, does that make sense? Any questions? The vehicle itself is a huge rating tool. What do you think would have a higher rate, a 2021 Corvette or a 1995 Escort LX? Which do you think would cost more money to insure? Full coverage, identical.
1995.
Nope. I unfairly picked a car that was probably before your time as well. An Escort was a 4-cylinder. It is the Corvette, okay? The reason why is it's got higher horsepower. It's a more expensive vehicle. A variety of things that go in there. Now, if I buy that Corvette, or you buy that Corvette, who's going to pay higher insurance? Absolutely, because of your age rating on it. So, again, here is going to be my life lesson for today on buying a car. Anytime you get to the point where there is a car you want to buy, I don't care if you're sitting at the dealership, you're sitting at the person's house you're buying it from, the first thing you need to get is the year, the VIN number and call your insurance agent. Let him or her run a quote for you. I had a lady who was in her 60s. She's at the best rate she's ever going to have. Had a Chevrolet Malibu. Now, this has been a few years ago. They first came out with the Chevrolet Cobalt. It was a weekend. She buys the Cobalt. It's a cheaper car than the Malibu. Her insurance isn't going to have to go up that much. You know, it's a new vehicle, so it's going to go up, but it's not going to go up that much. She comes into my office Monday morning. I run the quote, and her insurance went up $100. Couldn't figure out why. I called the company. So that's what the actuarials came with. Well, that's not going to satisfy me. At that time, Daly had the Chevrolet dealership here in Staunton behind the City Hall. I called up there and talked to Wally Ottersberg, and he says, well, you're the last person that I have to talk to in the insurance business in town. I go, what do you mean? Because you're talking about so-and-so's Cobalt. I go, and I said, yeah. That particular car, the way that it was made for safety, which automatically makes you think it's going to be cheaper on insurance. However, the way that it was made in those first years for safety, if you were involved in an accident on the front corner bumper, to be able to get that bumper off, you had to disassemble the entire front end. You had to take the bumper off, the grill out, the hood had to come off, otherwise it wouldn't fit right. Both front fenders, which did nothing more than add expense in the case of an accident. We have to pay for it, and it costs more money. Insurance company is going to charge more premium for the risk, okay? So with that in mind, I bring that up because if you do not call your insurance company and ask them how much it is, and that becomes unaffordable to you, hate to say this, the only person you can blame is yourself because you really need to do your homework when you're buying another vehicle, okay? Driving characteristics. How many people's parents work in Staunton? How many people's parents work within 30 miles of Staunton? How many people's parents drive to St. Louis or Springfield every day? Okay. The person that is driving in Staunton is possibly putting on 1 to 2 miles one way. Going back and forth to St. Louis, depending on if you're in the county, you can be putting on as much as 60 miles one way. Who has the greater chance of having an accident? The person that's driving more. They're on the road more. Yes.
So my dad used the company vehicle.
Okay.
So would that be like the same thing?
Well, it is, but it isn't. The company actually carries the insurance under a commercial lines auto policy for him. Okay. Besides his company vehicle, how many cars do you have in your household? Okay. So in that case, if in this case, without you driving yet, your mom is probably the principal driver on the car that she drives. Your dad is an occasional driver, not driving at all as far as back and forth to work on your mom's car. He's insured. His company vehicle is insured by the commercial lines policy, which is a totally different ball of wax, but he's going to be covered under their policy and they're paying for it. So he doesn't have to worry about how many miles he puts on that vehicle.
Yeah.
And that's actually a pretty sweet deal. Now that also gets down to if your dad decided to go out and buy another vehicle for himself to drive around on weekends if he was not allowed to drive the company vehicle. In that case, the vehicle that he is driving that he owns himself, he no longer has to rate that as a work vehicle. He gets to actually rate that as a pleasure vehicle, which is a cheaper rating on there. So that gets into your driving characteristics. There's how far you drive, what you drive it for, that sort of thing. Okay?
We've got about 2 minutes left. Do you guys have any other questions before we wrap up?
No.
Let me ask one quick question, because
Yes.
I know this is something that will come up with these guys when they get their license. Let's say that they're with their friend and their friend asks to drive their car.
Okay,
Is that covered?
Yes.
And what happens if the friend gets in a wreck?
here's the key. Insurance follows the vehicle, not the driver. So in other words, if you give your friend permission to drive your car, you're giving them your insurance or your parents' insurance, okay? On the opposite side of the coin, if you drive your friend's car and there's no insurance on that vehicle, you are driving an uninsured vehicle, you will lose your driver's license, you will have to go through a process to get it back, and when you do, you will have to have, which is actually the last thing on here, a financial responsibility filing for liability. Meaning that when you walk into an insurance company, the filing states that if you don't pay your premium, we have to tell the state, and as soon as the state finds out your driver's license is once again revoked, typically speaking, that lasts for 3 years. Sometimes, depending on the violation, 5 years. And what I want to point out is, if you think your insurance premium is ugly now, you get it, they call this an SR22 filing is what we file it under. You get one of those and you have a very, very good chance, depending on the insurance company you're with, on paying a minimum of double what you're paying now. So, I almost got it in the whole
You
time.
did.
I
You
did.
did. Hey, what do you
Okay.
guys tell Mr. Brower for coming in today?
Well, thank you. And my phone number is on there, okay? And I'm not trying to sell something. I mean, I'll sell it.